How do state and federal estate tax exemptions work together? Imagine planning a big family gathering where two different hosts set their own rules for what they will and won't accept. That's kind of how estate tax exemptions from the federal government and individual states work together. They operate separately but both impact how much of your estate can pass on without taxes. The federal government sets a high exemption threshold, which for 2025 is about $14 million per person. If your estate is below that, you won't owe federal estate tax. This exemption can also be transferred between spouses, so if one spouse passes away and doesn't use all of their exemption, the surviving spouse can use the remaining amount. This is called portability and can double the exemption for married couples. Now, states have their own rules. Some states, like Illinois and Minnesota, have their own estate tax with much lower exemption limits, such as for $1 million and $3 million respectively. These state exemptions are separate from the federal exemption and are not portable between spouses. So, if your estate exceeds a state's exemption amount, you might owe state estate tax even if you are below the federal limit. Because these taxes are separate, your estate could owe both federal and state estate taxes if it exceeds both exemption thresholds. The federal estate tax is calculated first, based on the total estate value minus federal deductions. Then, the state estate tax is calculated on the remaining estate value after the federal tax is deducted. Some states include federal adjusted taxable gifts made during your lifetime in their estate calculations, which can increase the taxable estate at the state level. When planning your estate, it's smart to think about both federal and state exemptions. Strategies like gifting assets during your lifetime can help reduce the taxable estate. Trusts can also protect assets and provide control over how they are distributed. Using life insurance can provide liquidity to pay estate taxes if needed. Because state laws vary and sometimes don't match federal rules, working with an estate planning attorney familiar with your state is a good idea. They can help you coordinate your estate plan to minimize taxes and protect your assets. So, in simple terms, federal and state estate tax exemptions work together by applying separately but both influence your overall estate tax liability. The federal exemption is usually much higher and can be transferred between spouses, while state exemptions are lower, vary by state, and often cannot be transferred. Considering both is key to keeping your estate plan on track and ensuring your assets go to your loved ones smoothly.